Okay, broader market update. We'll start with the S&P as we usually do. This is September 23rd. So Friday night, we have a full weekly candle, and it is day 13. We're starting with the S&P. This is daily chart. It's day 13 of the daily cycle. We almost got to that June low. Almost, you can see, and we have a lower wick. So we got a rally on the lower time frame, the hourly chart, 15-minute chart, etc. And so this droop down obviously needs a lower high at some point, right? I mean, think about it. This big move down, so it started with this gap down. This was your CPI print day, right? The S&P didn't have a chance to react to this because that CPI print comes out at 8:30, and so we had a huge gap down and then huge bearish follow through, and so we had this like big draft down, and then we had this lower high, and now we have this other draft down. So you expect we're gonna get another a lower high at some point, right? Like let's draw that out, right? So just to be kind of clear, so we'll draw out a few different paths, right? So we have this thing, boom, and then rejection. Then we had this lower high, that, and then that lower high, that, and then that. So maybe something up to here, maybe even all the way up to like close, like retest 3,900, right? And then something like, right, and we don't like the exact path. Obviously, there's no way to know, but if it's day 13, right, we can kind of model that out and say if we have let's just call it a 25-day cycle, and that's just kind of a random number. Oh, that's interesting. A 26-day cycle would get us right to the CPI print, right? And we talked about that in the last video. So that's a logical sort of timing band to get the next low, right? Because that's our next big catalyst. Unless obviously the Fed comes out, makes some big announcement that they're all of a sudden dovish. I doubt that because Powell talked multiple times about how history was not kind to folks that started to ease too early. And that tells me that they're going to try to stay the course. So that's the daily chart. And if we look at the weekly, it's week 14, right? So it's day 12, was it? And it's week 14, or day 13, week 14. Next week, we'll obviously have week 15, and we'll have day 14. And, I mean, look at this droop down. So, again, if you've been watching this channel, I mean, really, you can kind of go all the way back. And as always, I'll have some links posted in the description. My first videos were posted somewhere around here, right? Like in January. We had this big swing high. It's like, uh-oh, bad news bears. Look at this series of lower lows. And then this is a fake out, right? Like, uh-oh, this high is higher than this. So it's a higher high. But now we almost made a lower low. Didn't quite get there. And here's the thing. You've got to keep yourself open. Maybe this is somehow some kind of really early ICL, right? And then we're going to get a rocket ship up. Well, in that case, you know what your levels are. They're very clear to the upside. You obviously want to zoom in on the lower time frame. This is a weekly chart. But you know what your levels are. At this point, there's no indication that that's what's happening. And if we go to a monthly chart, I mean, look at that. The way this monthly has been drooping, and we've been talking about this in these videos. Look at this upper wick, this thing. Oh my God! And now we didn't quite get to that low of June, but we've basically kind of kissed it. I think the other thing is if we go back to that weekly chart, we're so close to that 200-week moving average, which is something that's just sort of watched by many, right? Sorry if I zoom in. So that's that yellow. This is that yellow line. So we didn't quite get there. And if you think about other time periods, I mean, that was COVID. We sliced through it deeply, closed below it. We even had this bullish candle that closed below it, but obviously resolved higher. This 2018 sort of Christmas Eve bottom kissed it, right? Like got much closer than this one did just here. And you have these other, time periods where we clearly, again, either kissed it or This time kind of cut right below it. That's in 2011. The financial crisis, oof, we went meaningfully below it. And I think this is what a lot of people are kind of calling for. This kind of idea that we fall meaningfully below. Again, so that's your 200-week moving average, which essentially is, call it your 4-year moving average, because 52 weeks in a year, right? And so that's going to be an interesting spot to watch, right? Are we going to get a quick bounce and then boom, rocket ship? That's great. We can make money there. Or do we get a trending move below that, right? I guess obviously there's the alternative is also a grinding move lower below this. Either way, you can make money once you figure out which side of this sort of trend, this trend indicator, if you want to call it, we're gonna fall below. So that's your weekly, and that's your 200. And actually, let's just stay on that weekly, and let's see what do the cues look like in that context. Okay, that's interesting. So the Qs have really got much closer to that 200-week moving average. And again, same count. It's week 14. So you imagine, I don't know. It's like, dancing with the devil. Ooh, and that's IWM. Yikes. IWM already closed multiple weeks below that 200-week moving average. And now we've kind of plunged below it on week 14. That's really, really interesting. Because if you think about it, that's right. That makes sense, right? The IWM is one of the most, economically sensitive, right? Wow. So we're now making a home below the 200-week moving average. That's really important to know about. And if we go to the monthly chart, it's the same kind of idea where we're thinking we're in a long-term cycle decline. We're going to break below this low on month 27. We're on month 30 right now. Maybe we get a low somewhere around month 36, which will be around March 2023, which could very easily coincide with a Fed pivot based on the dot plots that they talk about in that Wednesday meeting. Again, the conversation in that meeting suggested at least another full point of hiking for the rest of the year. So that would take us to at least 4% on the federal funds rate, effective federal funds rate. So that's important to know about. And these companies are going to be hurt by a lot. So an interesting short opportunity here. Just about crossing the line here. And we know we're going to make a low below 162.78. Okay, so still a couple of dollars down. And it'll be a good question, right? Wow, 143 could be a magnet. We'll think about. I mean, there are different options, obviously, always. At the very least, we'll do battle with the 150 area, I guess. And again, this is IWM. If we look at the Qs, what kind of levels are we talking about here? Okay? So definitely looking at a dance with the 260 area, right? Right. I mean, look at this massive advance after the COVID low. I mean, look at these green candles. These are monthly candles. That's an amazing uptrend. Just higher high, higher high, higher high, higher high. Just beautiful, clean green candles. Almost no wicks. Then we had this little wobble, and then we kept going, and then oh, that's ugly. Ugly 3-month period. Then we moved higher. This was more of a grind versus this. And now just look at this stair step lower. Oh my God. So you have to imagine we probably come and revisit this area where we had this grind. There was a lot of money that changed hands here. And then you have this whole period here. We're going to have to see how much further do we go below this 250 area. We'll see. So very interesting things setting up for the market. I mean, sort of do or die really here.